Calling all LLC owners. Welcome to your roadmap for tax success in 2024. Whether you're steering a solo single-member LLC or navigating the waters of a multi-member setup, decoding tax forms like Schedule C, 1065, or 1120S is your passport to compliance. Buckle up for this journey. We're diving deep into the maze of tax intricacies, ensuring your IRS alignment. From decoding business specifics to unraveling income and deductible expenses, consider us your co-pilot. Get ready for game-changing strategies, tax management, penalty evasion, and maximizing deductions. Our mission? Empowering you to master the 2024 LLC tax filing game, guiding you through this fiscal labyrinth. We're breaking it down into two lanes, single-member LLC and multi-member LLC. Despite sharing the LLC tag, their tax roads diverge. Your tax filing precision for 2024? It's our mission today. Join us as we uncover vital tax returns, essential records, nitty-gritty tax return data, savvy tax payment management, plus tips and FAQs to navigate the IRS maze with confidence. Starting with step number 1, determining the tax return necessary as an LLC owner hinges on the type of LLC you operate. Let's break down these distinctions. If you're operating a single-member LLC, indicating sole ownership without partners, your tax filing involves using forms Schedule C and Schedule SE, available within the US 1040, the individual income tax return. Schedule C is your tool to report business income and expenses, while Schedule SE is crucial for calculating your self-employment tax liability. This particular schedule, SE, abbreviates self-employment. Now, let's delve into Schedule C specifics shortly. Before that, let's shift our focus to the multi-member LLC scenario. In the case of a multi-member LLC involving at least 2 LLC members with additional partners, your tax filing involves US Form 1065, known as the Partnership Return of Income. This form facilitates the clear allocation of income and losses among the partners. Picture this, it allows you to divvy up profits among yourselves, somewhat like sharing the spoils. Now, this form, Form 1065, must be submitted by the standard business tax deadline, typically on March 15th, spanning about 3 pages. Form 1065 comprehensively covers all your income and expenses. Now, whether you operate a single-member LLC or a multi-member LLC, if you've opted for S-corporation taxation, a choice that can reduce self-employment tax, particularly beneficial for businesses earning over $70,000 in net income, you'll need to file Form 1120S, the income return for S-corporations. Form 1120S primarily ensures that owner-employees receive a reasonable salary and accurately calculates distributions from the company. Like Form 1065, this tax return is due by the business tax deadline, usually March 15th. Additionally, LLC partnerships and S-corporations must still file a standard 1040 form for individual tax purposes. Now that we've covered the necessary tax forms, let's delve into Step 2. What essentials to document in your tax return? Simplifying matters, the tax code and IRS requirements are straightforward. They aim to establish your identity, uphold integrity, determine your earnings, and allocate the rightful percentage toward taxes. This fundamental principle applies universally to every business, irrespective of the specific tax return required. Moving on to Step 2, crucial for every LLC owner, involves detailing personal and business information on your tax return. This includes essential data such as your business name, address, EIN number, primary business activities, the business code, your chosen accounting method, your level of involvement in business operations, the business's acquisition details, 1099 form filings, and any other pertinent business information. The IRS may inquire further to ensure comprehensive understanding. Once completed, Step 3 involves navigating to the sections on Schedule C, General Partnership Forms, and the 1120S Tax Form, focusing on income reporting. In this phase, the IRS aims to determine your business's gross income. You might receive one or more 1099 miscellaneous or 1099 NEC forms to precisely report your earned income. Additionally, substantial online sales could lead to the receipt of a 1099-K form for income reporting. Once all income is reported, it's on to Step 3, documenting your qualified business expenses. While platforms often streamline income tracking, handling expenses requires meticulous effort. Tracking and categorizing expenses throughout the tax year become your responsibility. Once organized, Step 4 involves recording expenses on your tax return. This includes documenting asset purchases, direct qualified expenses like advertising fees, meals, employee benefits, cost of goods, and any incurred vehicle expenses. Upon listing all your qualified expenses or tax deductions, you'll reach your net income, a decisive factor in determining your total taxable income and respective tax bracket. Calculating these aspects swiftly occurs when filing the 1040 form with a Schedule C. Post this calculation. Step 5 involves documenting any other individual activity on your tax return and proceeding to file your taxes. However, if you've completed Step 4 within a 1065 partnership tax return or an 1120S tax return, Step 5 involves acquiring your K-1 document. This document distributes each partnership's share of current income, deductions, credits, and other special items for individual tax returns. Essentially, after filing your 1065 or 1120S by the usual business tax deadline, often March 15th, filing the K-1 document on your individual 1040 tax return is necessary. Moreover, if you're an S corporation paying yourself a reasonable salary, your W-2 income is also included in your individual tax return. Moving on to Step 6, settling your taxes. If you find yourself owing taxes by the end of the tax year, most tax software will precisely outline your owed amount and potentially offer a payment plan. Making these payments is easiest through irs.gov/payments/directpay. If you can't find your payment details, it's likely your tax return is still processing. Looking ahead, if you anticipate owing more than $1,000 in self-employment taxes, the IRS mandates quarterly estimated tax payments. These payments are due at the end of each quarter to ensure timely tax payments before filing your return, preventing potential penalties for underpayment. Paying at least 110% of the prior year's tax exempts you from penalties or interest for underpayment. Congratulations on diving deep into the intricate world of tax filing for LLC owners in 2024. Now that we've unraveled these crucial steps, we'd love to hear from you. What challenges do you face when handling your LLC taxes? Share your experiences or burning questions in the comments below. Remember, mastering your taxes is a journey, and we're here to guide you at every turn. Don't miss out on staying informed. Hit the subscribe button and ring the notification bell for more expert insights on navigating the financial landscape as an LLC owner.